Hi, everyone, and welcome. Thank you for joining us for another segment of the Tide 10 speaker series. Tide's mission is to highlight and connect movers and shakers in the investment industry and to promote diversity and inclusion. I'm Janice Wu. I lead fundraising, marketing, and investor relations for HealthQuest Capital. We are a growth equity manager that invests in innovations that improve value in the healthcare system. And we invest across subsectors. So we invest in devices, diagnostics, tools, healthcare IT, and healthcare services. And we seek to find investments that either improve patient outcomes or reduce economic costs in healthcare. We invest across the full spectrum. I'm so excited to be here today on behalf of Tide to chat with Emily Sumner, the Senior Investment Manager and Chair of the Investment Committee at the Gilder Office for Growth. In her role, Emily provides oversight and guidance in managing all aspects of investment activities and strategies at Gilder. Prior to joining this family office, Emily was an investment officer at Oklahoma State University and a vice president within the investment management group at Hatteras Funds, where she focused on sourcing, due diligence, and portfolio management of alternative investment strategies across public and private asset classes. Emily, so excited to have you here today. I've done sort of the more formal biography of you, but would love to hear in your words more insight on the Gilder Office for Growth, maybe your investment strategy and what you focus on, and maybe some recent initiatives.
Gilder Office for Growth is a single-family office. We're located here in the Raleigh, North Carolina area, but the Gilder family is located all across the country. Our single family was founded by Jenny Gilder after her father, Richard Gilder, transferred a large portion of his wealth to her brothers and sisters in 2010. Richard Gilder, unfortunately, is deceased, but he just recently passed away. He founded a brokerage firm, Gilder, Gagnon, Howell, that in the 1960s did very well and passed a portion of his wealth to Jenny and her brothers and sisters. And today, we manage assets for now 4 generations of the Gilder family. That's about 16 family members. Really privileged to be helping such a great family. They're really nice people and just very philanthropic and enjoy working with them. The way that our investment platform is set up, though, because we have different generations, everybody's a different age, different investment acumen, different liquidity, different wealth levels. We set up an investment platform that has 5 different pooled vehicles. So if you think about how you would allocate to your 401k, you have different mutual funds you can allocate to, right? Depending on your risk, your constraints. That's what we've tried to set up for these family members. So we set 5 pooled vehicles. 3 are focused on public funds, 2 are focused on private strategies. That way, the family members feel like they have some sort of control. If they don't want to do a liquid investments, they don't have to. They kind of allocate across everything, but it gives them a little bit of objectivity on how they want to set their asset allocation. So that's where our investment platform is today. There's 5 team members. I chair the investment committee. Jenny and Robert. Robert Lovis is our president and COO. Jenny Gilder is our CEO. They sit on the investment committee as well. And then we have a CFO and an office manager. So we're a pretty small team, but we do, anytime we think about making investment allocations, and we typically allocate to funds. So think of just how you would think of a pension fund or an endowment. That's how we set our asset allocation. We're a manager of managers. Unlike them, we can take more risk. And we can take more risk because the family wants to take more risk. When I started working in the family office world, they said, well, if you've met one family office, you've met one family office, because every family office is set up for the family and what their risk return objectives are. And just as is in the name, Gilder Office for Growth is focused on growth. So they're okay taking some volatility and some risk, which is really exciting from an investment standpoint, because you can really go down to a longer term horizon, and you can also think about innovation and disruption, which is something that we just really kind of is at the top of our kind of thematic overlay that we put on any sort of asset allocation. So, we'll invest in hedge funds for sure and some more general strategies, but I think where we've seen the most success is where we found sector specialists, where especially if there's like a secular tailwind. So, we invest in a woman who just focuses on disruptive innovation. And so it's mostly technology, but it's also technology. It goes to, electric vehicles, and it goes to Bitcoin, and it goes to fintech and biotech across the spectrum. And she's phenomenal because she's not looking at the next 2 years; she's looking at the next 5 to 10 years. And so anyway, that's where we found a lot of successes. Again, focused on more what's not happening today, but what's going to be the trends for the next 5 to 10 years plus.
Thank you for that oversight on Gilder. It's really interesting. You mentioned that there's all sorts of different liquidity needs and investment objectives for all the different family members. I think that's great insight into how different family offices can operate. Maybe it'd be helpful to talk about some of the recent initiatives. We've mentioned this before, but you were talking about how Gilder is expanding to manage the capital of not just this family, but expanding to managing capital on behalf of other families.
Absolutely. So this is a recent initiative. We just registered with the state of North Carolina, and it's called Gilder Partners for Growth. So, and this was really, really for the sustainability of the firm. The Gilder family, we could stay around and work for them, but Jenny really wanted something for us as the employees as we build the wealth of her family, that we can build something too that Jenny would be a part of, but that our organization could build, for other people besides Jenny. So, we found a lot of success in focusing kind of on private and public strategies and thematic, also being just a boutique shop, where we really get to know the family education, generational wealth. How do you transfer the culture that in G1 to G3 to G4, and the responsibility that also comes with that. And so that's what, Robert and I work a lot on doing. I do more than just the nuts and bolts of the investment, but really the family education part. Robert just leads that. And so we're really bringing our family members kind of a full service shop where, I'm sure you can go to big shops and get lots of options, but you really just don't get that personal feel where you just call us up, and it's very boutique. So we're probably looking to bring maybe 2 to 3 more families. And we found a lot of interest in, hey, well, most of our assets are in this, public fund, but we don't know about investing in real estate, and we can do that. And we're very niche in that because you can't be small and nimble, or private equity. I know that's a special asset class that, again, we're not going to go in the big funds. We're going to go in the smaller niche funds where we believe that alpha can be generated.
That makes a lot of sense in the evolution of how Gilder is thinking about growing for generations to come. You also mentioned that Gilder has an endowment style investment strategy. And in your background, prior to joining Gilder, you were the investment officer at a large university endowment. And now you obviously chair the investment committee at Gilder. You've taken on significant responsibility fairly early on in your career, and now you've seen a number of different allocator types. Maybe it'd be helpful to just hear about your journey and how you got to the seat that you're in today.
It's interesting. I got my undergraduate degree in business economics and accounting from a pretty small college in Virginia. And after that, I went and worked for a big private equity firm, the Carlyle Group, that really in their accounting fund management. And there I learned how to read an LPA, learned how to, was there when they drafted PPMs, and then all the accounting that goes with that. And you really learn the framework of alternative investments in private equity. And so the language wasn't new to me. It was kind of embedded in me, which was a big help to me as I kind of moved over to the investment side. I worked in DC for a couple of years, then came back closer to where my family was from, and worked for a fund of funds, worked under a CFO. And I think I was working for him for 6 months, and a position on the investment side came up, and he said, Emily, this is what you want to do. I liked accounting. Accounting's a great career, but my passion was certainly, my interest was in investing, and especially alternative investments. And so switched over there a little under a year, and went from associate to senior associate to vice president. I was lucky that while I was there, I went to school at night to get my MBA at the University of Chapel Hill. Got my MBA, concentration in finance. I got to say that and the experience in Hatteras really set me up for the job at Oklahoma State. I just knew a lot of private funds. I knew a lot about it while I was there. Besides getting my MBA, my traditional training was more in business, economics, and accounting, not investment and finance. And so, I took my chartered alternative investment analyst because I wanted to learn about alternatives. I get my MBA in finance because I wanted to learn more. It was kind of just always not, kind of working hard. But that's really what I think set me up for, them continuing to give me more responsibility. And then also when I was able to go work for OSU, which was awesome. That is a fantastic team, and would have worked there as long as they would have had me. But my family called me here back to North Carolina, so life happened, and I started looking for a job back here. And I was fortunate to find Gilder, and they wanted somebody to lead their investment platform, which was another huge opportunity. And I will say, I mean, even when I was applying for the job, you said, I'm young. I even said the obvious. I'm young. Like somebody 20 years older than me. I'm going to work real hard, but they're gonna know more. They've had 20 more years, and I think they were comfortable with taking that risk because they liked me. I had grit. Whatever reasons they may have come to, but it's been a great ride, and I feel very fortunate. That's for sure.
Yeah, thanks so much for sharing your journey to get to the seat that you're in. You mentioned a few times being fortunate, and I think that's so interesting because it's definitely a combination of being fortunate or lucky, but also, you mentioned how hard you worked, seeking out those opportunities, and having mentors and other individuals that can provide those opportunities, but it's really a combination of you being ready and competent and available to take those opportunities. So I don't want to discount, you can chalk it up to being fortunate or lucky, but it also sounds like a large part of it has been your, hard work and seeking out those opportunities. So at Gilder, you oversee both public and private markets investing, which must provide an incredibly unique vantage point, especially in the last few months. How do you think about steering your portfolios in both of these asset classes, especially in times of market dislocation like the one that the COVID pandemic has brought about?
We've talked about this a lot in investment committee because it's so hard to time the markets and how the markets are going to work. I mean, maybe somebody called COVID, but I'm just saying, no, but not a lot of managers were really preparing their books for that. And especially like endowment. I mean, it's just, you can't move that quick usually. So what we've always tried to do, and this is probably because I was brought up in the private, world first, is long-term. Think long-term. It's really hard to call a bottom. It's really hard to call a top. But to be long-term in nature, and then also to be diversified so that you have strategies that are going to work when markets are blowing out. So when Q4 of 2018 happened, that was like, wow. And then it ramped right back up. Who could call that? So us, the way that we perform well is because we do have a liquid strategies, which typically are lagged because we all know why, the reporting, but also it takes a while to trickle down into these private markets. And sometimes by the time it trickles down there, the economy's already rebounded, which is what we saw in Q4 of 2018. So I will say longer term, being diversified, I love a liquids in a portfolio. And then what we also do is we diversify among these managers so that we have some managers that aren't correlated. I mean, we look at all the risk metrics, make sure the beta, not everybody's all above one. And some, we don't put hedges on our portfolio, but we do have kind of like a volatility manager that should do fine if volatility is flat, but we'll do great if volatility is high. And that really helped us in March, when the market just completely dropped and they were up 2%. So I think just learning that lesson that you don't know when to call the market and to just be patient. And we always keep a little dry powder too, just in case. So.
Yeah. I want to shift the conversation a little bit into diversity and inclusion. So you, in your experience, you've overseen and built a number of investment teams, and you currently work for a family office that's helmed by a female family member. So what does diversity and inclusion mean to you from a team building perspective?
It's so important. when you talked about, our initiative with Gilder Partners for Growth, we're likely going to continue to build our team, not at 5 people, but definitely 1 or 2. And Jenny and I and Robert have talked about this a lot, about how it's not just diversity for the sake of diversity, but it's diversity because you have a diverse perspective. So we're all going to be qualified, absolutely. Like, we wouldn't hire someone that wasn't qualified. But I'm qualified as an investment professional, but I have a female perspective. And that's different than an investment professional as a male perspective. An investment professional that grew up of a different race or ethnicity has a different perspective, different life. And they're also going to have different networks. We all know the name of the game is this networks. That's how I get different investment ideas. I roll ideas off of my networks. I want to make sure my network is diverse. How are you going to continue to do that? Make sure to hire diverse people. And I think there's been so much research out there that shows, managers who are minority or women-led are in the top quartile. And then we look at, less than 5% of the asset, or 10% of the trillions of dollars that are under assets under management are managed by women or minorities. It's a little staggering. And so this was probably a year and a half or 2 years, like a year and a half ago. Jenny and I were really talking about this and seeing the barriers that, us as asset allocators, she's done her part, and we will continue as building a diverse team. But as asset allocators, like, there's so many things like, oh, we won't look at you if you don't have a 10-year track record. Well, that's not fair. They weren't promoted to partner because of backwards thinking. So how can we get around that and still do our due diligence? And sometimes it's extra work. When Jenny and the team hired me, they first got a list of candidates that Jenny looked at, and she said, we're not going to interview any of these people until you can provide a list that includes different races, different ethnicities, different genders, and then we'll find the best candidate. And of the last 5, 2 of them were women, and they weren't all white. And so I think, like, they're all going to be qualified, but it was our recruiter that had to go do a little extra work. Mm-hmm. And we're lazy. We talk every time that we meet with, like, a manager, and they feel the pressure from us. They need to. They're not going to get our checks as much if they just continue to say, oh, we're just going to, this hasn't not worked. Just because it's not working doesn't mean it's the best practice, or, hasn't caused any issues. So, we, especially on the private side, I would say HealthQuest is definitely an exception, but, we look at the team, and it's like, okay, guys, where's the difference of perspective? And it's uncomfortable for them, not for me. It's uncomfortable for them because a woman is asking this, and they're like, oh, it's nobody on our team. But I'm like, hey, I understand, but what are you doing to change it? We're not talking about the past. We're talking about going forward. And that's when I think I would say to any manager who gets asked that, and they could ask our team that. We have females, but we don't have any minorities on our team. And we'd say, yeah, we're absolutely thinking about that, and this is what we're doing to change that. And I think you can't be defensive. You have to be introspective and say, you're right. What do we need to do different and help us? So that's a long-winded answer, but clearly this is like a passion of Jenny's, a passion of mine, I think of our whole team, that, we want to do our part to move that forward.
For sure. I think that's a really great point about looking outside your ecosystem or the immediate people in your network. At HealthQuest, I think we think about diversity as in our investment strategy. We aim to fund businesses that improve access to healthcare, regardless of socioeconomic status or race. I think we're lucky we have a broad network across healthcare that helps us source deals that address this inequity, but we can always be better. And we can always ask for, guidance and advice from our advisors, from our co-investors. It starts, I think, with identifying what we don't know and asking for help, even if that can be uncomfortable or more work in the short term. But thinking outside the box and expanding our network is definitely a focus for us. At Gilder, what do you think you're continuing to learn about diversity, and how do you think about diverse and inclusive investments, whether that's managers or directly in companies themselves?
Absolutely. So, and I think with Me Too and Black Lives Matters, it's very much more at the front end, which is fantastic. Because then we're seeing conferences put together, making it easier for allocators, especially our team, our size, like to just say, hey, if you're looking for women-led or minority-led, or if you're looking at emerging managers is such a just catch-all. Like, be more specific so that we can really target. Is it private? Is it real estate? Is it hedge funds? And then what do you mean by merging? And I think that's been super helpful. We actually are I'm signed up for a virtual summit in July that is just minority-led funds, portfolio managers. That's fantastic. There's also conferences, at least for women, that, a KO conference and the PE Summit out in California, where you can have great networking. And then with the family offices, it's kind of fun because family offices, if you have the trust, you can just say, hey, we're looking to, back. And maybe it's because I'm a woman and Jenny is a woman. We're like, hey, we really want to, is there any good women managers that you guys have? We'd love to meet them. Or minority led. And they're like happy to say when they do, because I think it makes them feel good. And we're like, great, we want to expand our network. And so it's a little bit grassroots, but also I just have to say kudos to the organizations that are hearing this and doing something to help allocators.
And for the last part of the interview, I just wanted to give you the opportunity to highlight any insights or themes that you're excited about investing in. You obviously have a very long-term view in your investment strategy, but what are some things that you're looking forward to?
So I feel like a broken record because my favorite sector, even though it's volatile, and again, that's why long-term nature is biotech and healthcare, because it's just like, it's not going anywhere. It's such a big portion of GDP. We have an aging demographic. It's such a huge sector it's going, but then you see the reason that it's really interesting is because then you see the innovation that's happening in that space. We used to look for a cure for cancer, and then I was like, okay, we're looking for a cure for breast cancer. Now we can go to the different strands, and I don't even pretend to understand it. I know, wow, the different strands, and then you can be more precise. And then they've found treatments and even cures for some of these different, very specific diseases, and that just expands the universe, but it also expands the efficacy of these treatments and drugs. And I think that's huge. They're inelastic. Somebody can't put a price on your life, or 4 more months or 7 more months. And so, these are all great dynamics for an investment. And then I think you just have to find the sector specialist that you believe can really, because I certainly would not. I mean, you need someone with a PhD, someone with a PhD medical background, but then also investment background, and that's totally fine. And so, that's always been both in the private and the public, obviously with HealthQuest, but both in the private and the public side, we just think that is such an interesting area. And then in general technology, so whether it's fintech or, pick a technology, we like to think again, where are we going? Whether COVID changes our normal to a new normal or not. Where are we going? What are trends that are just not going to stop? And that's innovation. Think of the cloud, that's not going anywhere. And that we're just only in the beginning stages. So that stuff really gets me excited. And then also knowing the innovation behind it, it can get you to be patient. I think that's the problem with public investing. People can't, and it's hard because you're judged every month, every day. But if you can just stay still and be patient, if you have quality managers and you don't sell drift, then you can really see your thesis play out or not play out. So I think, having the stomach for that is not always easy.
Thanks so much, Emily. I really appreciate this talk. I think you've been super candid and open, both on the investment strategy side, but also in how you think about diversity and inclusion and even your journey specifically. So I know the first part of 2020 has been tough. We're entering the summer and month 5 of quarantine, and there's still quite a bit of uncertainty on the horizon. I think we're all doing our best to sort of focus on the things we can control and try to release the things we can't. So on that note, what have you been keeping or what have you been focusing on to keep sane and balanced?
My husband is a tennis pro, So he's been getting out there and hitting with me, which has been so wonderful. It's like the one thing that you're allowed to do, and obviously he's my family, so it's really safe. But that's been fun, and I mean, we live in North Carolina, so the weather's been gorgeous, and been able to like get outside. And I have to say, me with the rest of the world broke down and bought a Peloton bike, and that's keeping me massively sane. So, but yeah, it's you just adapt. Like children, I think are the best about doing that. And so if we could just catch on a little bit, I think we'd all be fine.
Well, good. I'm glad that you have those things to look forward to. This was such a great conversation, Emily. Thanks again for the time. And thank you again to Tide and Grace Reyes for sustaining all of this through this pandemic. Tide's really done a great job of creating interesting and valuable ways for people to stay connected in a time where we can't all get together in person. Thanks again and take care.